The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
It kind of felt like the night before Christmas on Monday, ahead of the September World Agricultural Supply and Demand Estimates report on Tuesday, because it seemed like all was quiet in the house for the most part. It was a fairly easy day, a little bit higher in quarter beans, a little bit lower in the wheat trade, a solid day in cattle and hogs. Here to talk about things with us, we welcome in John Heinberg with Total Farm Marketing. John, hope you had a good weekend. Good to talk with you, and hopefully you liked my comparison there a little bit to kick the show off. I don't know. It felt like another very quiet kind of positioning type day ahead of whatever USDA is going to throw at us on Tuesday, John.
Well, in the corn market, it's called consolidation, and we're just not moving. 6-cent trading range from high to low. Did get a couple pennies higher. Let's go look at that chart. Last 3-4 days here, just basically a series of lower lows, lower highs, kind of building some base. We'll see if we get some reason to move tomorrow. That's what I'm kind of waiting for on this USDA report. The money's just sitting on the sidelines. Nobody really wants to stick their neck out. We'll see some more short covering probably tomorrow, in position squaring before those numbers. Obviously, we'll get the crop ratings tonight. We'll see what happens there. Beans, there's where the friendly story could come in. Look at that carryout projection for tomorrow, 207 million bushels. We get close to that beans are undervalued. And so maybe we're pricing a little of that in today. Unfortunately, we still have a wheat market, but I'm kind of feeling like maybe we got a bit of a chance here that maybe this wheat market is finally reaching for a bottom. I'm not going to guarantee anything yet, just the way that market trades. But these last 3 days has been a pretty aggressive sell-off, and how hard we sold today just to start the session just made it kind of feel like maybe that was the day we get, the capitulation of people are just saying, I'm done. And that's usually when you get that turnaround. So, hopefully that's the case there. But again, that wheat market's still trying to find some bullish news.
Well, and let's pick this apart a little bit more. I think in the case of quarter beans, John, USDA's numbers on Tuesday, I think everyone is expecting a lower yield. Just how much, I think that remains to be seen. That's the question. How much is USDA going to want to come down? This is the first boots on the ground type look at the crop from USDA. But then again, when everybody's leaning to one side of the ship, and we can get a surprise the other way. So I don't anticipate, I cannot imagine corn or soybean yield going up in this report, but maybe it stays neutral to slightly lower. I don't know. What's your feeling? Just all the chatter, the pre-report expectations you're hearing heading into Tuesday.
This very much might come down to where are we at compared to expectations, and then what's the trend here? And, I've talked about this with a few of my colleagues as well as a few clients here. And if you go look at July, August, now September, what's the trend we're seeing? The supply, even though the demand is a concern, that carryout is getting a little bit smaller every single month. And that might be enough for this market to keep this thing supported from the standpoint of, now we're going to be down close to 2 billion bushels. Well, what happens next month? Are we down to 1.9? And does it keep going? The USDA is making demand cuts. What if that demand wakes up? Something starts going wrong in South America. There's some weather things that we could talk about there down the road. But I'm looking at trends when I look at the USDA report, and are we still seeing the trend that this pile is getting a little bit smaller? Is it friendly yet? No, not by any stretch. 2 billion bushels is a lot of corn, but at the same time, it's enough with money flow and how money handles things in terms of that managed money flow that they're seeing a trend that they say, maybe we don't want to be this short. Maybe we want to be a little more neutral. Does that give us some more price support? I'm not saying a rally. Okay, but I'm saying some price support that we can stay, hey, let's hold this $5 window. Let's hold 5.10 if we get a little run back up. So we'll see what the numbers give us tomorrow in that regard. What are they going to be the adjustments? Obviously, if the USDA comes in and they're heavy compared to expectation, that changes the whole narrative I just covered and throws it out the window. And then we're a lot of chatter about acres. We saw some analyst groups have added acres in. We saw those big FSA numbers in August. We're going to get FSA numbers tomorrow as well. That might be the more important of the two reports tomorrow. Is just where we seeing these FSA acres come in. If you think back to August when the report came out, the USDA report came out, we actually held prices pretty well. And then the FSA data came out at noon, and then we sold off. So on that prospect of more acres coming in. So like I said, tomorrow the bigger report actually might be that FSA numbers coming out at 12 noon.
It's a good point to make. So I'm hearing a lot of chatter about farmers saying they're going to sell beans off the combine, store corn. That seems to be the prevailing theme across the Corn Belt, just looking at basis and where basis is kind of fall into and looking at the futures board and more. So in your eyes, I mean, should we be looking, are you hearing a lot of that first? And then secondly, going into a report day like this, should we be looking to protect any sort of risk in either or both of these markets here, John?
Well, you got to, in terms of the risk protection side of it. And what you're saying, I've been hearing too, a lot of guys are going to move these beans out. They got a good price there. They're still not convinced that corn prices need to be where they are. Maybe down the road, like I said, prospects get better and, we got some carry in the market. Maybe that carry needs to be realized, so we'll see. But I think that's something we're looking at. Obviously, if I'm a producer and I'm going to store my corn, we need to make sure we protect that situation in terms of a bit floor underneath the bin, longer term. Let them corn bushels be your upside, not your downside. In this regard, if the prices continue to fall, I've already done some work in March protecting the $5 level. We have a carry market, and I know our colleagues today were kind of chatting about it within the office. Hey, September comes off on Wednesday, 471. If it doesn't change, today's number, that's still 14 cents underneath December. In a carry market, a lot of times we see that December come down to meet the September, and then the March comes down to the December, and we lose that carry. So we got to make sure we're protecting that. So if you're storing corn this year, make sure you got some protection in, because number one, interest rates are higher, so it's going to cost you more to store that corn out there. So if you're going to lose that carry in the marketplace, then it could be a double whammy if the market prices don't recover. So make sure you're managing that risk there. On the soybean side, you're looking at a market that's going to have a 200 million bushel carry out, give or take a few million bushels, barring any major surprises from the USDA tomorrow. We still got a big South American crop possibly coming next year. That's the chatter, but we'll watch the weather. There's already a few things buzzing out there. But right now, get those calls in, make the sales, bull call spread, something out there, bullish type play for longer term. Because as well as I do, if South American weather doesn't show up the right way, all of a sudden global supplies are tight, and we're putting a 15 on front of beans instead of a 13.
It's a lot of things to consider, and obviously working with a trusted advisor such as yourself is important here. I know we're, kind of up against the clock in terms of, where this USDA report's going to be out here in a matter of hours. So, you can only do so much ahead of the report, but obviously letting the report go through, settle if you need to, but just sitting down and making some decisions and sticking with those targets. I know you and I talk about that quite a bit, finding those targets and being okay with them, not necessarily just giving up that target once you hit it because you think it's going to go higher or lower or whatever the case is. Right, John?
Correct. The word's discipline, stay with that target. You put that target out there for a reason, not just to throw a dart at a board. You knew that's a number that's going to work for you in your operation. Let those target hits, find the way to shift the risk somewhere else in terms of re-owning it or something along those lines. But again, make sure you just stay disciplined. We're not trying to catch lightning in a bottle here. Good fundamental, build a base if the market were to rally to sell into, or protect the floor, protect the value that's in front of you. Again, 2 billion bushels. I know I'm sounding a little more optimistic. Maybe I'm more just thinking that on money flow and time of the year and the calendar, those types of things right now. But 2 billion plus bushel is a lot closer to 450, 420 corn typically and historically than it is 480 corn.
We're having a conversation today with John Heinberg from Total Farm Marketing. John, let's go over and talk livestock and this cattle trade. I know you're a cattle guy, and we've been talking about this market for a while. I think a lot of folks, it's kind of separated into two camps. Either you feel like we're coiling to make a move higher, or this market has hit its top and we're just waiting for the bottom to fall out. That seems to me that's the two camps of school of thought here in this cattle trade. So as you assess things now, as we've gotten past Labor Day, seeing a solid day on Monday in cattle, what's your take? Where do things stand right now? What are the charts telling you and more, John?
Money flows pointing higher at this time frame. We saw funds stepping in a little bit here last week. We saw cash trade firm up in the south, steady in the north for the most part. Retail values still have good value in it. But then we break down that retail number, and there's an area I keep talking about with people. It's 90% lean. That ground beef, it's trading $40 a hundredweight more than last year at this time frame. So the packers are still making very good money on trim. I was chatting with you here before the show. I went trying to find a beef chuck this week, and two out of the three stores in my city did not have any. And that just tells you that their retailers are grinding the chuck for ground beef because that's where the profit margins are at this time frame. So it's interesting to see how this might play out. This might be a reflection of that tighter supply picture finally hitting the marketplace. In general, the meat case for beef through going into the weekend, not Sunday, the going into the weekend, just looked a little empty. There just wasn't a lot there, and the prices were still relatively high. Now, if that hits the consumer, that's a different style of demand loss that we see. But right now, it looks like the money's flowing in. You got good strength in the feeder cattle market. We got good strength flowing into that live cattle market here in this window. Typically, we see production come down in the third and fourth quarter, and I think the market's pricing that in. Now, with that, this could be the run out to the top. We don't know exactly how aggressive this market wants to be. I've talked about $200 cattle in April now a couple times I've been on here, but at the same time, don't forget about the puts. Okay, a 190 put April is $4 today, or $4 and change. There's a great working order. You're locking in a historically high price at a fixed risk just to keep a floor underneath this market. Put that put in, let the market run. You've got the cattle. If it falls apart, you're locking in historically good prices. I know there's not a lot of meat on the bone, but given the price of feeders and inputs and things of that nature, so make sure you're protecting what meat there is on the bone at this stage. But right now, the market looks pretty friendly, and it just feels like we got some demand moving in. We got some price support, and now the money's flowing as well. That's given this cattle market, especially going into 24, some pretty good push.
How about the hog trade here, John? It feels like a pretty solid day there as well. Some of the same fundamentals here in hogs maybe as in cattle. Looking at that retail demand and more. What are you watching in the hog side?
The export demand's been very, very good as well. That's been something that's really helped pick this hog market up. Seasonality's in play here. Typically, October hogs, if you own them from now to their expiration, we see an upward flow. It's been an extremely volatile market. We've been up $2, down $2, up $2, down $2. But if you look at the trend, we're working higher. So that's staying with the seasonal plan. Now, typically, is a window we see some strength coming into those summer hogs. You look at June at 96. Should that be trading around 101 given the supply side of the equation, and $200 cattle or 196 cattle today out there in April? So that makes you wonder if this market's got a little bit of just tied to it. Let's flow with it. For once, maybe cattle and hogs are going to work together instead of against each other. Last year we saw hogs tanking while cattle took off. Maybe this year it's going to be just, hey, it's meat. We've got global demand concerns. We need that, or we get global product concerns, supply concerns. Let's bring some money flow into these markets here in the third and fourth quarter, which are typically stronger.
Overall in the proteins, and I think we can rope dairy into this too a little bit as well here, John. It just feels like watching this fourth quarter, retail going to be very interesting. School's back in session, football season's back, tailgating, etc. I think that's going to have a pretty big impact here on some of the direction of cash and futures the next couple of months, John.
No, I agree with you totally. And again, you just can't discount the supply side of the equation in terms of animals that are available out there. Yep. We still got a pretty good taste for beef. I know the American consumer may be getting stretched here. You look at credit card debt, you look at consumer spending, those types of numbers, which are very big metrics. Now we're throwing a $90 crude oil at us here, or upper 80s. Gas prices went up last week. That's all going to eventually maybe come to the mix here. But at least, when we start talking about production coming down, third and fourth quarters, typically that window that we start to see those things show up. And in cattle's case, we're not seeing that's response for more cattle moving into the cow lots. or into the cow operations, bring us more calves. It's unfortunately going to be a process that's going to take some time. And right now, there's no indication that we're seeing that growth and expansion to bring those numbers back up going into 24.
John, before we let you go, any final thoughts you want to share? We covered quite a bit here. It just feels like a lot of getting yourself prepared for the reports on Tuesday and beyond that. Harvest window obviously is upon us as well. So it just feels like maybe getting ready ahead of a busy few weeks here, John, is kind of important with your marketing plan right now.
It is. Don't try to trade the report tomorrow. It's going to be what it is. And, the market's already probably built most of the numbers in, barring any extremes, one side or the other at this standpoint. We know what we've got kind of coming at us. Now, the biggest thing I think is going to be the combines. When we get them rolling in the fields, just talking to guys. I got some guys saying things are awful. I got the next guy saying things are great. And the variability is going to be all over the map this year. And it's even going to be hard to gauge that. So I'm kind of tell you to stay off social media and reading what you see out there. And obviously, just because maybe things aren't so good out the back, your backyard, doesn't mean it's pretty good, not good somewhere else. So it's going to be interesting to see how this shakes out. Tomorrow gives us a little bit more foundation. Again, at least some numbers the market can work with, but don't try to pick and guess. If you got value, you got opportunity, take advantage of it, go from there, and just stay disciplined. As the combines are rolling, don't fall asleep. Make sure you're still paying attention to the marketing side of the equation.
John, if folks want to reach out to you, get some advice at Total Farm Marketing, what's the best way to do that?
Love chatting with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And that website of ours, totalfarmmarketing.com. A lot of great information. Love to chat with anybody anytime, especially if you're busy. Feel free to pick up the phone real quick if you just want to know what's going on in the marketplace.
With that, John Heinberg, Total Farm Marketing. Always great to catch up with you. Thanks so much. Have an awesome week. We'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.